Hi, welcome back to the channel. In today's episode, I want to provide you with an update as to what's happening in the Russian economy because inflation is continuing to be a persistent problem. This chart shows the latest data that's now been published for October. And as you can see, inflation is currently 7.7%. This chart is probably slightly misleading because the scale on the right hand side doesn't actually start at 0, it starts at 7.5% and goes up to 11%. But 7.7% is the lowest that Russia has seen inflation over the past 12 months. As you can see, it has been coming down since March when it hit a high of 10.3%. So you might be thinking, well, doesn't this indicate that things are going quite well, that things are improving? Well, yeah, there's a trend here that technically inflation is getting lower. However, you need to take into account the fact that the Bank of Russia's target rate for inflation is 4%. In fact, it's been 4% throughout the whole of the Ukraine war. And if we expand the scale of this chart to show what's been happening over the past 5 years with inflation, you can start to understand the scale of the problem. Now, this scale does actually start at 0 on the right-hand side and goes up to 20%. And you can see that in 2021, which was before the invasion of Ukraine started, inflation was already proving to be a problem for Russia. It had grown from less than 4% to around 6%. It then took off in 2022, and we saw inflation spiking above 16%. It actually got up to 18% at one point. And that was seen to be an emergency level from the Bank of Russia's point of view. And at that point, they increased interest rates to 20% to try to tackle inflation because, as I'm sure you'll be aware by now, usually when you have high levels of inflation, you increase interest rates because it makes borrowing prohibitively expensive. Therefore, companies and individuals tend to borrow less when interest rates are high. And so when they borrow less, they have less money to spend. That usually brings demand down. And when demand falls, you have a reduction in prices, or certainly a reduction in the increase in prices. So that was the logic that the Bank of Russia was following. And as you can see, inflation did come down from that high level that was seen immediately following the invasion of Ukraine. But it didn't come down that much. It only came down to around 12%. We then saw a remarkable fall at the start of 2023 when inflation got down to around 2%. Now, nobody can really explain that. And when you look at this chart, it doesn't really fit in with the rest of the trend. You would have expected it to continue reducing gradually rather than dropping like a stone and then bouncing back again, but that's what happened. And then in 2024, we saw inflation returning back to high levels, and it's been consistently at those sort of levels over the last 18 months or so. So the reason for showing you this chart is really to put into perspective the problem that long-term inflation causes for an economy, because the problem with inflation overall is that it increases prices. Therefore, there is pressure on wages. Everybody wants to get paid more if prices are going up. So wages get increased, which means people have more money, they spend more, which generally means demand is going up, which means inflation rises again. So you get caught up in an inflationary spiral. And that's what's been happening in Russia over the past 5 years. And all of this erodes the value of your currency, because if you've got runaway inflation at home, then generally speaking, you see a devaluation in your currency. And that's what's happened overall with the ruble over the past 5 years. We've seen the valuation falling. Now, if we have a look at the expectations in Russia at the moment, it's interesting that once again here, this scale doesn't start at 0. It starts at 12.5% and goes up to 14.5%. And currently, the expectations in Russia amongst businesses and consumers is that they're expecting inflation to continue to be above 12%. In fact, it's been above that level for the whole of the last 12 months. So we're seeing a real disconnect here between the official reported inflation figure of 7.7% in October, which, just to remind you, is a reducing trend. So it looks like we've seen 6-7 months of continued reducing inflation. But when you look at the expectations of companies and individuals in Russia, that's not marrying up to that data. They're expecting inflation to be above 12%. So what that tells us is that in reality, prices are still rising at a much higher rate than 7.7%. Now, in terms of what's going on with Russian businesses, this chart shows the movement in producer prices in Russia over the last 12 months. And producer prices, also referred to as factory gate prices. So the price of a product when it's leaving the factory in Russia. And interestingly, this scale does start at 0 at the bottom and goes up to 11% at the top. Interestingly, over the past 5 months, we have seen a real problem with producer prices. And in July and September, producer prices have actually fallen. So year on year, right now, producers in Russia, Russian businesses, are selling their products for less than they were this time last year. Now, that doesn't marry up with inflation either. When you've got inflation at 7.7%, you would have expected companies to be increasing their prices by at least 7.7% if they want to maintain their profit margins. But what we're seeing is producer prices are actually being cut whilst inflation is still rising rapidly. And what that tells us is two things. Firstly, it tells us that Russian companies are seeing their profit margins being eroded because they've got rising costs, they've got increasing wages as a result of this inflation wage spiral, so they're having to pay people more, and also the fact that Russia has converted to being a wartime economy. So the Kremlin is now sponsoring lots of different companies, and those companies have seen a rapid increase in their wages because they're trying to recruit as many people as possible to produce as many things to get paid the maximum ticket by the Kremlin. So wages are going up, as are fuel costs and rent, and all of the costs that you would associate with the business, and particularly raw materials, if you're having to import raw materials from overseas, because the value of the ruble today is less than it was 5 years ago. So the companies in Russia have got rising costs, but they've got falling revenue because their prices are going down. So what this tells us is that inflation isn't being caused by an increase in the cost of goods coming out of Russia. It's being caused predominantly by imports. And that makes a lot of sense because when you think about the level of sanctions against Russia at the moment, Russia is really struggling to be able to find enough imports to satisfy all of the demand. And that's one of the reasons why inflation is continuing to go up, because the cost of anything being imported is rising rapidly. Now, we touched on interest rates earlier, but I just wanted to go back to that point. And this is one of the main problems in the Russian economy right now, because over the last 5 years, we've seen a rapid increase in interest rates. At the start of 2021, interest rates were actually sitting at 4%, which is in line with the Bank of Russia's target rate for inflation. However, throughout 2021, we saw an increase in rates, and before the war in Ukraine commenced, they'd got up to around 8.5%. As I said earlier, following the invasion, we saw rates spike up to 20% to try to tackle what was expected to be a wave of inflation, and the Bank of Russia was right. There was an increase in inflation. However, as you can see, the interest rate was actually reduced quite rapidly, and by the middle of 2022, it was actually at a lower level than it had been before the war started. It was down to 7.5%. Now, unfortunately for Russia, inflation continued to rise. And so in order to tackle that, at the end of 2023, interest rates started to go up. And that trend continued throughout 2024. And we saw interest rates spiking at 21%. Now, if we jump back to the inflation chart, you can see that inflation is still well above that target rate of 4%. So you would have thought that the Bank of Russia either would have kept rates high or even increased them further to get down to that target level of 4%. But as you can see, over the past few months, we've seen reductions in interest rates, and they've come down from 21% to the current level of 16.5%. That's despite the fact that inflation is still significantly above the target level. And the reason why the Bank of Russia is now doing this is because we're seeing the economy slowing down rapidly. If we look at what's happening with GDP, you can see that there is a significant downward trend here. These figures are the quarterly reported data published by Russia. You can see that in the third quarter of 2023, the growth in GDP was actually above 6%. And that was as a result of the fact that Russia had converted itself to being the wartime economy. However, the impact of that conversion has started to wear off because real companies in Russia are no longer thriving. They're really struggling, particularly with all the increase in costs and the reduction in their global sales as a result of the sanctions. So you can see that since that high, we've seen consistent reduction in the growth in GDP. And the latest figures for the third quarter of 2025 show that GDP only increased by 0.6%. And if this trend continues, which is extremely likely, then Russia is likely to start seeing reducing quarterly GDP, and therefore it will go into recession at some point within the next 6 to 12 months, probably within the next 6 months. The next 2 quarters could very likely be a reduction in GDP, which would then be an official recession, because you have to have 2 consecutive quarters of contracting GDP to officially be in recession. And one of the reasons why this is now a major concern from Russia's point of view is because the level of debt in the country, both through organizations and households, is rising rapidly, and it's now up above 163 trillion rubles. Now, I'm working on a video at the moment to go into more detail about the level of debt and particularly the bonds that have been issued by the corporates. But clearly, when you've got rising debt and very high debt costs, because interest rates are now at 16.5%, but they were above 20%, that is a very dangerous combination, because when you've got an increase in debt, but also a disproportionate increase in the cost of that debt per ruble, then that's going to put a lot of pressure onto households and businesses, reduce the amount of free capital that they've got, and therefore they're likely to take on more debt, and then you get into a debt interest rate spiral. And that's what's happening in Russia right now. So what's the summary and conclusion today? Well, I wanted to post this video to give you an update as to what's happening with inflation, because it's one of the key metrics. We don't get a lot of data out of the Kremlin anymore, but we do get inflation data. There is a question mark as to how reliable some of that data is, because as we talked about earlier in today's video, although the official inflation level is 7.7%, companies and households in Russia are seeing inflation above 12%. That's their expectation when they're talking to various people about what they think is going to happen over the next month or so. They're basing it on what they're seeing happening with prices right now and what they're expecting to happen as they go forward. So when you've got an expectation at that level and the actual figure is coming in 5 percentage points lower, it tells you that there's a disconnect between what people are seeing on the streets and what's being reported officially for the international markets. So that's telling us one story. But the other story that we've also seen in today's video is that despite the fact that inflation is now coming down, it's not coming down anywhere near rapidly enough to save the Russian economy. The Bank of Russia has set a target inflation rate of 4%. Now, that is double most of the other developed economies. If you look at the USA and the UK and the European Union, they've all got a target rate of 2%. That's what they see as being a healthy level of inflation, because you want to have some inflation to enable companies to be able to increase wages and cover some cost increases, whilst obviously increasing their prices. But you don't want too much inflation, because it starts to have a negative impact on the purchasing power of your currency, and usually means that your currency will devalue in the international markets. So despite the fact that Russia's target rate is double everybody else's, it's still not achieving what it wants to, and inflation is almost double that doubled target rate. So that gives you a flavour as to the problems going on in Russia right now. But alongside those higher inflation levels, we've also got really high rates of interest. So anybody or any company that's borrowing money in Russia at the moment is having to pay back around 20% on those loans every single year, just in interest terms. And I covered this in a recent video, but it's now thought that lots of companies in Russia are not even making enough profit to cover the interest on their loans, as a result of the fact that producer prices have been falling over the past 5 months or so, despite the fact that inflation is still running at very high levels. So we've got real cracks starting to emerge in the Russian economy. And one of the big concerns now is the level of debt that's been built up over the past 5 years at very high rates. And a lot of that debt is in the form of bonds. So lots of corporates in Russia have been issuing bonds. And as those bonds mature, they usually have a maturity of between 3 and 5 years. So bonds that were issued before the war started are now maturing and needing to be refinanced. They're being refinanced at much higher rates. That's putting further pressure onto the cash flows of those businesses. And we've also got a big increase in consumer debt in Russia, and that's coming in at much higher levels than they were paying historically. So there's a lot of demand on the cash from the interest side of things. That's meaning that companies and individuals have less free cash. And despite the fact that they're in that situation, we're still seeing inflation taking off. So all of this tells us that the Russian economy is suffering right now, and the prospects and the look forward for the next 6 months are not good. It is very likely that Russia is going to drift into a recessionary situation because we've seen GDP coming down in every single quarter over the past couple of years. And if that trend continues, which is very likely given the fact that the sanctions have now been ramped up, and we're seeing individual companies such as Rosneft and Lukoil being hit with sanctions so they can no longer deal with their international partners. All of this indicates that GDP is likely to continue contracting and that Russia will go into recession at some point in 2026. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I said, then please give me a thumbs up. Please subscribe if you haven't done so already. Thank you so much to everybody that's supporting me. If you bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a YouTube member or buy me a coffee member, thank you for that support. And here's something to put a smile on your face.
Gira. Brava. Pongo seduto. Bravo. Laica, zampa. Brava. Machi intorno. Bravissima. Pongo seduto. Zampa. Zampa, dai che ce la fai. Zampa, guarda cosa ti do. Bravo. Laica. Brava, senza dirlo. Machi. Machi, salta. Salta bene. Brava. E adesso? E adesso? E adesso uno per tutti. Bravi, bravi, bravi.